Hello friends, in the previous video we have seen the recommendation of Narsimhan committee first, and in this video we will going to see the Narsimhan committee second recommendation. So under the banking sector reforms. So let's see. Yes. So Narsimhan committee second was established in 1998. So first committee was established in 1991 for financial sector reforms, and the second committee was specially for the banking sector reforms. Why second committee was established? Because whatever the recommendation Narsimhan has provided to the government under the first its first committee was very much successful, and government see its benefits in the financial sector. So government has appointed the second committee in 1998. So his first recommendation was concept of narrow banking. So narrow banking concept emerged during the Great Depression of 1929. Narrow banking definition is that means if public sector bank is facing high incidence of bad loans and non-performing assets, if it is high as 20% in the bank, to solve that problem, this committee introduced a concept of narrow banking. Sorry. As a part of this, highly impacted financial institution will be allowed to put their fund in the risk-free assets. Means bank generally do they accept the deposit and provide the loan to the people. Means whatever the deposit accept, from that deposit the bank gives loan to the other people. If the loan has not recovered, sometimes that deposit may if the bank goes bankrupt, if the loan has not recovered, the people's deposit can go bankrupt. So currently we have the deposit insurance policy also, under which a person's means up to the 5 lakh deposit can be recovered by the depositors. But narrow banking concept says that whatever the deposit banks get, that must put in the risk free assets. Means under the narrow banking concept, means narrow bank is a bank that accept the deposit and keep that deposit in the risk free assets. Means whenever the depositor wants his deposit, bank should give the deposit to the respective depositors. Means if bank wants to give the loan to the some persons, then bank should find some private investment in the bank, and from that investment bank should give the loan. Means in the narrow banking, banks work of the bank is accept the deposit and keep it in the risk free asset without giving the loan from that deposit. So narrow banking is not implemented in any country till now. In our India, is the time come for the narrow banking? So no, because in our country we are in the middle income country, and for establishment of the new businesses we need loans in the financial sector. So bank is one of the important asset, one of the important structure to provide loan in our country. So the concept of the narrow banking, though recommended by M. Narsimhan under his second committee, but currently the time has not come yet. Second is government ownership. Means as I said, in the public sector bank, government ownership is more than 51%. So if a bank has more than 51% ownership of the government, then governments do whatever it wants in the banks. So due to this, means if the RBI or the banks wants autonomy, then this ownership need to be reduced. If the government has all the ownership, means whatever banks want to do, or in the board of governors of the bank, the government has more say. So therefore the banks will not function as it own. Means whatever bank want, that could not be passed, because the government want what they can pass in the board of governors, because government has 51% ownership. So M. Narsimhan says that true autonomy to the bank can be provided only after the government ownership has been reduced. If the government ownership has been reduced, then bank have the private players in private investment in the in that bank, and both will decides whatever is beneficial for the bank. So third recommendation is capital adequacy ratio, or we can call it as a CAR, capital adequacy ratio. Its definition is that the percentage of the capital concerning a bank's risk weighted liabilities and assets. In Indian banking system, structurally was weak and could not absorb the shocks. Therefore, to build its capacity and inherent strength, the committee recommended increasing the capital adequacy ratio of the banks and other financial institutions. So first of all, we will see capital adequacy ratio. Capital adequacy ratio means bank need to keep some of the capital with it, that in the in means they should keep the capital with the bank, concerning that their loans will not recover in the futures. Means bank, if the banks need, if many of the loans has been defaulted by the defaulters, then bank need some capital that should be able to recover the banking function, or for the functioning of the banking activities. So this is called as capital adequacy ratio. And percentage of the capital concerning banks risk weighted liabilities. Whatever the risk weighted liabilities, what are the liabilities for the banks? Depositors money is the liabilities for the banks. Means some fund bank should keep itself, that from that CAR or capital adequacy ratio, or that capital bank should give the money for the depositors. So currently under the Basel III norms, these are the norms for at the international level for the CAR. Currently under the Basel III norm, bank need to keep 8% of the capital adequacy ratio plus 2.5% as conservation buffer. Conservation buffer means additional 2.5 percentage, that buffer should be created when the banks has huge profit. Then bank should keep some of the profit as a CAR. Means currently bank need to keep CRR, cash reservation with bank, SLR with itself, and CAR with bank itself. Means bank currently need to keep SLR and CAR with itself. If bank if the banks were is in the risk position, or in the we can say it as means bank liabilities increases, then at that time CAR can be used to fulfill that liabilities of the bank, and liabilities of the banks are the depositors money. Then next is a strong banking system. Strong banking system, under which the committee recommend that stronger and more resilient bank which can compete with large multinational banks or companies. It advocated for creation of a strong banks by merging two or more banks. However, it cautioned against the merging of the strong bank with the weaker institution. Means whatever I says in the earlier video, that Bank of Baroda was merged with Vijaya Bank and Dena Bank. Here Narasimhan committee recommend that strong banking system means merge two or more strong banks and create such a banks that can compete with multinational banks. Means for example, Bank of England, Bank of Switzerland, these type of the banks. Means we have to create such a strong bank with a huge capital and with huge banking structure that can compete the multinational banks. Currently, as I said, SBI is the only bank in the top 100 banks list of the world, means largest bank of the world. So a recommendation of M. Narasimhan committee is that create a strong bank, merging with the strong bank, not merging with the strong bank with weaker bank. Means Vijaya Bank and Dena Bank was not performing well, so that was merged with the Bank of Baroda. Here we need to create a strong bank by merging strong bank and merging two or more banks that have strong banking functions. Then next recommendation is change in the RBI's role. What RBI role M. Narasimhan is suggesting? Let's see. RBI's role as well. The Reserve Bank of India should function only as a regulator and administrator of India's financial system by forming rules, regulation, and ensuring compliance. It should diverge by controlling stakes in the bank and other financial institutions. Means RBI's role should be limited to regulation and creation of the rules, and not involving or having stakes in any banks or financial institutions. Means RBI should not have stakes in any banks or any financial institution. They should do the role of regulator or administrators. Means they should only administer the banking function rather than owning any financial institutions or banking. And currently RBI is functioning the role of regulator very well, as recommended by M. Narasimhan. Later recommendation is with respect to the non-performing asset. NPS problem with banking sector. India's banking sector has a huge means a history of NPS problem. Currently, banking NPA rate means in 2024 is less than 3%, which was solved by many of the measures like RBI's prompt corrective actions or bank capitalization. But what M. Narasimhan suggested that uh, unsustainability, the sustainability of the banking system was under threat due to the NPS problem. Narasimhan committee recommended that total gross NPA of the banking sector is 3% by 2002. Means he suggested reduce the NPA to 3% by 2002. It's the time has been means we have achieved it in 2017-18 something after the various measures. To achieve this same suggested for the establishment of the asset reconstruction companies, and the government has passed SARFAESI Act of 2002 in order to incorporate. Means asset reconstruction company. Earlier he suggested asset reconstruction fund tribunal. Now he is saying the same as a asset reconstruction company. Means that company will take the bad loans NPAs of other banks and try to recover it and recover it from SARFAESI Act. This act allows these companies or other bank means any financial institution to recover. Means this act of 2002 allows bank to recover the pending loans or bad loans or NPAs by acquisition or the selling the assets of that particular debtor, or we can say it as the one who has taken the loan. Next recommendation is foreign bank. As I say, government allowed for the private sector bank. Now go in the second recommendation, committee recommendation, he suggested allowed for the foreign banks with some criteria like it should have 10 million to 25 million as a startup capital. If any bank has that much of the capital, or foreign bank have that much of the capital, that can start the foreign banks branch or foreign banks in our country. As I said, Citibank is one of the example of foreign bank. Then review and update the banking laws. As I said, bank is regulated through RBI Act 1934, Banking Regulation Act of 1949, and State Bank Act 1955, and other laws like cooperative, multi-state cooperatives, societies act. These are the some of the means regulate the banking laws or how banks should be function in our country. That banking laws need to be reviewed. Means he suggested that if any that should be means any recommendation bank suggested that should be reviewed, and if any provision is outdated, that should be amended or add the new provision under this laws. So next recommendation is, apart from that, M. Narasimhan suggested for the faster computerization, technological advancement, staff training, depolitization of the bank, professionalization of the banking, and review of bank recruitment and other things. Now IBPS recruits the banking personnel in the banking institution, and we know all the banks are now works with the computer. Technological advancement, we know we means many of our banking functions are done by technology like UPI or digital payment we are doing. Then staff training, means whatever the banking personnel selected through the IBPS exam, they are providing training. Means it vary from banks to bank. Like NABARD provides 15 days training, SBI provides 3 months training. Depolitization of the banks, means it's in alternate words we can say it as autonomy to the bank. Means now appointment of the banking bank board bureau that appoint the chairman of the bank or the persons into the bank's board, bank in the board of the banks. Then professionalism in the banking, means bank should work in the professional manner, because now the public sector bank now we have to compete with private sector bank, and private sector very much give importance to the professionalism. So now public sector bank need to have incorporate the professionalism in it if they want to compete with the private sector bank. As I said, review of the banking recruitment is done by the IBPS and other things. So most of the recommendation of the Narasimhan committee second has been adopted by the government and is implemented in our country. So thank you.